All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage on this beautiful Friday morning. If everybody can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let me know that we are all good. Kay, I see the one coming in. Yes, Yasina. Blessed morning indeed. I appreciate it. All right. So everybody can hear me. Let's make sure that we, each and every day, that we are taking massive action, not just in the Forex market, but in life, making sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, strategy, trading skills, and intuition. Let's always imagine our trades successfully materializing and that we are obeying our trading strategy, avoiding decisions based on greed or fear, and that we are never, ever looking back or stopping once our trade has commenced. All right, so let's take a look, right, at the fundamentals, right, to see what's going on, anything happened, to see if anything has happened overnight. We see that today that Eurozone inflation hits a 3-year low. So the Euro area's annual inflation rate fell to 2.2% in August, the lowest level since July of 2021, aligning with expectation. Right? The core inflation rate dropped to 2.8%, its lowest in months. This softer inflation data bolsters market expectations for a 25 basis point rate cut when the European Central Bank meets in less than 2 weeks. So we see, right, with our major central banks, inflation is continuing to decline, right? And that is a good thing. And we see that as a result, European stocks advance after inflation print. Okay. We see that in Switzerland, business morale improves slightly. UK mortgage approvals rise nearly to a nearly 2-year high, right? So things continuing to move, right? Continuing to move. But we look at Germany, right? And we see the jobless rate, okay, steady at 6%, highest since May of 2021. All right. Poland inflation rate matches forecast. It edged up in Poland. And then France inflation rate lowest in 3 years. Okay. So these central banks are continuing to do their job for the most part, and inflation continues to move down. If we move over, we take a look at the quant box and we go to the fundamentals and we look at the the central banks tab on the fundamentals. We can see right where inflation forecasts continue. You see to decline overall, right? So the projection, seeing it continuing to creep down and move down. We look here, the United States, and we can see that it just continues, right? The forecast continuing for interest rates, looking for further cuts moving into 2025 for the rate cut. So things are starting, for the most part, starting to improve, right, in regards to inflation and those forecasts, right, coming into play as we are always forward thinking, okay, starting to move down in regards to inflation and then um, the interest rate forecast as a result continues to creep down. So we see here in the United States, they've got a projection here, first quarter 2025 down to 4.25%. All right, so looking pretty good on that front. Okay, fundamentally, moving over to the Forex factory, right? As we want to make sure that we check each and every day. Yesterday, right, we were talking about some U.S. numbers were coming in. We see that the preliminary GDP Q over Q came in, right? The forecast was 2.8%, came in at 3%. It's amazing how oftentimes we can look at things technically as we were looking at the DXY, finding some support at a key weekly level. That then we get some strong, some favorable fundamental data coming in on top of what we saw technically, right? So 3%, and then unemployment claims came in right at forecast, 231,000. Preliminary GDP price index QREQ came in at 2.5, forecast at 2.3. Okay, so good news there. Last night we had Chairman Jordan speak, and here he talked about the weak euro area is hurting demand for Swiss exports. Right? So we are all connected. And so him speaking last night, when you see the SMB and Chairman Jordan saying things like this is letting you know that hey, they're going to do whatever they have to do uh, to protect their currency. So if they need to step in and strengthen that Swiss franc, that's exactly what they do. They do not hesitate to do that. So I'll definitely be keeping my eye on the Swiss franc moving forward. So we'll see. But he made it clear the weak euro area is hurting demand for Swiss. So we will, like I said, keep a close eye on what the S&P is doing with the Swiss franc, because they are right. They got out the gate first with the rate cuts, and we are expecting another rate cut right at their next meeting. So we'll continue to watch that closely. Right, the Swiss franc. Okay, that could be tricky at times. Yesterday, Boston spoke again. There's no details, so not sure exactly what topics he was speaking on. But we know that he was talking about, still being cautious. But I did read another article where he changed his tone a bit. It's pretty much starting to fall in line with that rate cut in September for the U.S. We see Tokyo core CPI creeped up to 2.4%. So when we talk about the case for the Japanese yen and the central bank continuing to hike rates, this supports that case, right? 2.4%, the forecast is 2.2. So the CPI continues to creep up. In Japan, unemployment rate came in at 2.7% on 2.5. So we'll continue to watch that. Retail sales was down. Industrial production month over month was down. Misforecast pretty much across the board in those areas. So we'll continue to keep an eye on that. Today, we talked about the Eurozone a bit already. In the United States, 8:30, we've got core PCE coming through month over month. That's going to be important. Canada, we've got GDP coming through, right? Been tracking the CAD closely. Let's see what the GDP is looking like to see if we continue to see, right, a decline in the numbers domestically. Canada, some of the key uh, economic data, right, has been weak as of late for Canada. Let's see if the GDP follows suit. Should be interesting. And then 9:45 Chicago PMI, and then we've got revised University of Michigan consumer sentiment. And then later, late 9:30, we got manufacturing PMI coming out of China. That's actually a number I want to see what happens there, right? If we continue to see further contraction in the manufacturing sector in China. So one of the things we want to look out for today, especially here in the United States, is that uh, we do have core PCE data coming out, but we are walking into a holiday weekend, so I'm not exactly sure what that volume is going to be looking like today. And then also, as we move through the weekend, moving into Monday, when we know that United States and Canada, we have a bank holiday. Okay, so if you're looking at your charts going into next week, today and then going into next week, right, you may see that the volume is down a little bit because we are in the holiday weekend here in the United States. So just keep that in mind, right, and trade with caution. Okay. 1 second. Make sure. And sure everybody has control of the microphone. Is there any questions? Okay. Again, moving over to the DXY, we can see that the dollar index held around 101.4 on Friday after rising for two straight sessions as investors geared up for July's PCE price index report, which is the Federal Reserve's preferred inflation gauge, right? So we just talked about that. The market is looking for confirmation that prices are on a downward trend, giving the Fed more room to cut rates. The central bank is widely expected to start easing in September with about 100 basis points in total reduction seen this year. On Thursday, the dollar index gained 0.3% as the latest GDP numbers and initial jobless claims helped alleviate recession fears. Okay. And then it has here still the greenback is set to post its worst monthly drop since November last year, as the dovish Fed bets weigh heavily. So today, right, that PCE number, as we are still we're thinking rate cut September, right? But how much, right? How large of a cut? Is it gonna be 25 or 50 basis points? Key data like the PCE data today um, can kind of help us gauge how large that cut may be, right? It's never based on one economic report, but a series of reports. So we are watching all of the key economic reports as we head towards September and the next Fed meeting. All right. Ryan, good morning, sir. How are you?
Good morning, bro. I am doing well, man. Doing well.
Awesome, awesome, man. Anything on the news front?
Um, Not a ton. This article that I'm actually in the middle of reading, executive board member of the ECB,
Yeah.
saying that it should be cautious.
Okay. So you got a Bostic, right? You got a Bostic on
Yeah,
the ECB side.
yeah, Isabel Schnabel.
Okay.
Um, so just being cautious regarding cuts, making sure that you're not doing too much too fast. So, but that's the only thing I come across this morning that really, outside of what you already talked about, that kind of caught my eye.
Got it. I appreciate it, sir. Yeah, I see. Like I said, we got the PCE today. Uh, but I'm thinking, I guess depending on how that report comes out, thinking things may they die down a bit. Like I said, with it being a holiday weekend, but we'll
Yeah,
see. We'll see how that goes
yeah,
for
I
sure.
agree, man. I agree. How
Yeah,
are you this morning, though, bro?
I am doing good, man. Just we've been talking back and forth. I've been really in the weeds with this group, right? Learning, and diving more into um, looking in greater detail with what these hedge funds are doing, how they're allocating their portfolios, working on just the long-term portfolio research.
Yeah,
Because I really want to, as a group, we've both spoke about it back and forth over the last several weeks. Move in that direction to help people do that. If that's what they want to do. Build that long-term portfolio. More investing. You know, um, in those ETFs, in those individual stocks, in those indexes, in addition to currencies, right, to kind of build out uh, a longer term portfolio, and
yeah,
tearing into different 401ks and looking at how they allocate the funds in those portfolios for those long term projections. So just been super busy with that, man. And then the fall, right? We've got fall classes at the university starting next week. So that's like the retail season, doing Christmas for the university. So that's where the numbers are really sets you up for the whole year. So busy, 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 but grateful for everything always, right? And for
yeah,
the
man.
opportunities, right, that are upon us. So doing great, man. Appreciate you asking.
Awesome.
Yep. So everybody, any questions, right, on the fundamentals? No? All right. So let me ask the group this, right? Those who have retirement plans or working, have 401ks, 403bs, and things like that. Have you guys ever looked into what, right? Uh what your plan is investing in? Like what ETFs, what stocks, what has anybody ever looked at that? Anybody delved into that to see the details?
Have we
Joy,
done?
yes and no.
Well, kind of yes and no.
Okay, I got you. I got you. Yeah, it's Jeremy. No, it's quite interesting. It's quite interesting. And what's really awesome is that if you do that and you take a look at that, you will see there are some things that they're investing in that are a lot of times are exclusive, like different products that are exclusive to uh, whatever company or organization is has your 401k, but or your retirement, whoever's handling that portfolio. But for the most part, there are a lot of things right in there that you can invest in and build a portfolio yourself. You could do it yourself on your end, right? So if you wanted to start your own portfolio, you could do that. I know with Darwin, uh, there are a lot of assets and different asset classes that uh, you can work with. You can work with. So if you're interested in that, Ryan and I have been working hard behind the scenes, doing a lot of research as we do some things on our own already. But how do we pull that into the group? Join my fidelity rep, tripping to give me take their class, and now Chase is offering it too. Yes, yes, right. So we say, hey, we want to be professionals, right? Um, so how many people are interested in learning more about that? Drop me a one in the chat.
Definitely, definitely. That's one of the reasons why I wanted to learn to trade because it was
Oh
all
yeah, oh
investing
yeah.
retirement. That's why I've been always been interested in because it's about using my money to invest it. Now I'm retired, and that's why it's interested me all along. So that's great. That'd be really good. Thanks, Benny.
You're welcome. You're welcome. So just continuing to grow, and learn, right? So if we, for example, if we come over, I posted it in the group, uh, but there are different sites and things you could go to, like for you can if you follow certain investors and their hedge funds, you can go and see their portfolios, right? And you can go to their sites, or because they're pretty transparent, or you can go to different third party sites that track these things. So one was let me see if I can pull this over. There we go. Can everybody see this on my screen? The hedge
Yeah.
follow. Yeah. So you could go like this is Bill Ackman, right? Uh, pretty well known investor. But you could come over and you could see what they're right for this one particular portfolio, this 13F portfolio. You can see, what they're holding in their portfolios. And you can see a lot of these things uh are assets that you can invest in yourself, right? So you can see, 17 for this particular portfolio owns a ton of Chipotle, right? Valued at 1.81 billion, right? 28.82 million shares owned. Look at the average buy price on that
Wow.
when he bought that. Now, if you guys just Google and look up Chipotle, right? If we look up CMG, does this allow you? Yes, you can see. So that's not what I want to see.
Oh,
But if you
wow.
go, if you take a look at the stock price and where it's at now, crazy gains, right? But you can look at Alphabet, Google, Howard Hughes Holdings, Canadian Pacific. Look, Alphabet, look, Brookfield Corp, right? So these are some of the top holdings in this one particular portfolio. Look, Nike,
Mm.
all right? I try to tell all the young people in my family, like you guys like wearing Nikes. That's cool. Just buy the stock also. They've got it good these days. They can just do it right from their phone, right? So, you can see, what they're holding in this portfolio, right? So you don't have to reinvent the wheel. And what you start to find out is that it's not rocket science in regards to, you know, how they're what they're investing in to find that out. So if we come over and we take a look at, for example, Ray Dalio, right? You can see there's an iShares trust, right? That he's investing in another iShares, right? BlackRock. Look, Nvidia, okay, Amazon, Microsoft, Google, Procter and Gamble, right? Long standing company, produce so many products, right? And then you can do your research, right, on each one of them. And so look, top 50 Bridgewater Associate Holdings, okay? Meta Platforms, Johnson and Johnson, Walmart, right? Look, Spider S&P ETF, the SPY, right? They're investing in that, okay? Costco, Coca-Cola, PepsiCo, McDonald's, Merck, right?
Mm,
Pretty fascinating, right?
yeah.
And so you have the ability, right, with the skill set that you have, right, to we could do the research on the fundamentals of these organizations, right? Learning how to do that. It's just like when we look at currencies, right? We know there's key fundamental data that we like to research and evaluate to determine, right, the strength of that currency, the direction that currency might go, right? And then we combine that with the technicals where you could do the same thing, right? You could do the same thing, right? So you can see stocks, ETFs, and we know that these right these ETFs they contain a number of different stocks and companies, right? And different assets. So if we go to uh if I go to uh Google, right, and I type in IVV, I can get my thing to work, IVV, right? Stock, and you can take a look at, say, the portfolio and the breakdown. So this is the iShares Core S&P ETF. Okay, so it's another product, right? And we can see its performance, right? And I really like the ETFs because, right, they contain, a lot of different assets, and then you figure out, hey, are they passively or actively, making the changes to these ETFs and redistributing, so there's a lot of different things that you research. Where is right? If we look at the holdings in this ETF, look, see, right? So within this ETF, this S&P 500, this core S&P 500 ETF, you can see what it's holding. Right? Berkshire Hathaway, right? Which just hit uh, just hit a trillion dollar market cap, which is amazing. Uh, so Warren Buffett is still doing this thing, right? Look, Alphabet, Class C, right? Eli Lilly, right? Broadcom, right? So you can see the individual breakdowns. And what's amazing is that we can follow a lot of these on our charts. So if we come and we take a look at the different ETFs, okay, that are available, right? You can track these technically.
Hey, Benny.
Yes.
So I have a question. And when I say yes or no, as far as with the stocks, I didn't know how to research it and stuff like that. What makes a great stock for besides price action for purchase. But when I bought that Berkshire, I just bought it off random.
Right. Okay.
I mean, I literally just bought it off random, and I was looking at the price action and it was in a pullback, and I went ahead and just took it. But it's like, how will we know? Because the one thing that what I have for stash, it always say, and I never deep dive in it, is like you got 100, your account is at 100%, 30% should be in government, 40% healthcare and stuff like that. I mean, how will we be able to determine how to have a like all inclusive or a diversified portfolio?
So like have one stock or have it. You should always diversify, right? You should always diversify. And then what you want to do is over time. So it depends on what type of plan you set up, right? And it's kind of like a trade plan, right? Like, so if you have a portfolio, how often do you review it? Are you reviewing it on a quarterly basis? Are you more passive and saying, okay, these are my allocations in my portfolio, and I'm gonna look at it on a year-to-year basis, and determine it. And from there, it's just really, um, the making the determination, fundamentally, like what's going on in the market. So it's just like when we look at the fundamentals for currency, right? Different fundamentals impacted in different ways, and right, looking at the market conditions. So you may have a long-term buy and hold portfolio. You may have like a recession portfolio where you hold certain stocks, and just understanding the different sectors where you may hold certain stocks that during down times, okay, these sectors do well, right? So for example, if we come over and we look at uh, the spiders, right? The ETFs. Well, we know this breaks down the S&P into 11 different sectors. So you may say, like, doing a recession, we're in a recession, right? Okay, I'm gonna reorganize. I've got a recession, or I have a separate portfolio that's a recession portfolio, and maybe I'm heavier in consumer staples, things that, no matter what, right? Maybe in utilities where it's like at the end of the day, if times are rough, people are gonna keep the lights on, right? So you may reallocate and do some things based on that. So it's kind of just like, in a sense, how we track currencies, like what we know that certain currencies and things like that perform differently in different conditions, right? How we talk about risk on, risk off sentiment. We know that there's a certain block of currencies that are going to perform better during a risk on situation as opposed to a risk off, right? Does that make sense?
Yeah.
Yeah. So it's kind of the same. It's kind of the same approach. In your portfolio, you may look at it. In a sense, when you're breaking it down and say, okay, in my portfolio I have, um you know I'm always going to have something that's a strong foundation, right, in my portfolio, like the S&P, right? So we know that there are different products that track the S&P, right, 500, right? So we saw Ray Dalio's the Bridgewater, where he's got the iShares. This is tracking the S&P, right? We're looking at that, the core S&P 500 ETF. So it has it allocated in certain ways, right? The distribution, but this is tracking the S&P, right? So that's a good foundational ETF, right? Then you might run to have either in your portfolio higher risk growth stocks, or higher risk, higher reward um, ETFs, right? Or however you want to do it, right? So a certain percentage of my stocks or whatever assets I wanted to be in that category of high risk, high reward. And then you may have, right, that as that third category, um, stocks or ETFs that are deemed, safe and more stable. So like those longer term, stocks, like something like some of those Forex, Coca-Cola, so a certain percentage, are going to be those kind of those long-term forever stocks, those ones that you can depend on, right? That may even dividend, right? So they're not as super growth oriented, but they're stable. You see what I mean? So you're balancing out your portfolio in that way. So your foundational stocks or ETFs, your high risk, high reward, and then like your safe and more stable stocks or ETFs. Get what I'm saying?
Yeah.
Hmm. And
Yeah.
then like your ETFs are cool because I used the example before. It's kind of like, you know you have where you can pick your individual stocks and things like that, or you could just say, like I think I used the example before, like I go to the the potato chip aisle in the store, and I see so many of them. It's like, man, I can have all of these. Well, that's what an ETF is. It's like, okay, we know we're in the aisle. We're in the aisle where this is the chip aisle, and then there's a whole bunch of different type of chips in that aisle, right? Well, the ETF is saying, look, I'm just gonna have one or two of everything, right? I don't want to do, so this you can see here with this S&P 500 where it has your major companies and then it's just allocated at different weights, as they call it, right? For the ETF, right? And so you have all of these different, like Ryan says, right? These funds, these companies, right? They put together a bunch of these firms, bunch of different products that people can purchase, right? If you're going to look at it that way, right? Dealing with the stock market or different investment products, is that's what these are, right? So when you see commercials running, doing, shows that you watch or sporting, they do it a lot during sporting events like invest code of QQQ, right? So we know what it's tracking, but it has different, allocations within, right, a particular sector, and things like that. So you can see the holdings, you can do the research, and that's what I love about, the internet and how we have so much access to information now. Like it's all here, right? This one even has fun facts, you know. Like I said, you can see performance and distributions, look at that total market return, 1 year, 24.53%, right? 3 year, 9.98%. And so you can see when people, especially, right, that, you have big time, big money, right? It's just like, okay, I'll take, you know, 15% over 5 years, 12%, because it's not the only thing that I'm holding. And then you can see how, with the allocation, how it performs, and then they're constantly looking at this to say, okay, you can do more research to see, are they actively uh, reviewing this fund and redistributing, the different stocks and things like that based on the performance on a quarterly basis, a yearly basis. Like how are they doing it? Um, so that's what makes this stuff so fascinating. But you can find out what the major players are doing, right? And I know a lot of you like who are trading like Darwin, if you look, right, you see a lot of these, right? You see a lot of the iShares, ETFs and things like that you could trade or you know buy and hold them. You can use your technical levels, right, to make the determination. Like these are right, your indices and things like that. Um, like we got our utility sector, the S&P. So we can see here the breakdown, right? As we're checking these, I think this is for ETFs, where you can go and take a look at utilities. So for this XLU, this ETF and utilities, uh, what are the top companies? Right? You see how you can drill down?
Yeah.
Right? Pretty cool. Everybody follow me? Yes, we're good
Yep.
on that. Okay. Right. And so you start to see like, wow, it's really not rocket science. Right. I just have to do my homework. There's no secrets here. Right. And then you could do like I said, you could do your research on the different companies. Okay. You could
Excellent.
click it and look at the distribution. I'm sorry, somebody say something.
No, thank you for the info.
Oh, you're welcome. You're welcome. So
I would say another thing to
mhm.
sorry.
Go ahead.
I
No, go ahead.
was, and you might get to this too, but dividends, if they pay dividends as an ETF or even as a stock. Another thing to add to your research, because that's also another
Absolutely.
way to continue to compound that portfolio.
Absolutely. And reinvest those dividends, right?
Yep, yep.
Yep. Just continue to reinvest those dividends and continue to compound it, like Ryan is saying, to where the more and more you reinvest those dividends and it grows and you're able to get more shares and things like that, then now you're looking at building a monthly income off of, or a yearly. Some of them depends on how they pay out the dividends, or a yearly income off your dividends, right? It takes time to build, but it's well worth it, right? And so we can combine, right, our ability to do technical analysis to look at the favorable and ideal price points to where we may want to get involved and buy more of a particular asset, just like we've done with currencies, right? So that's why we always say, focus on developing a skill set first, right? Then a lot of the doors start to open for you, right? So we see XLK, it's easy to find, right? That's a breakdown. Take a look at it. That's technology. So we can see here technically in this 1 hour chart, hey, we were due for a bit of a correction. No surprises to us, right? It's in a technical sweet spot. Look at it coming down, right? So we look at the fundamentals, look at the market overall, okay? And so we know that these ETFs are a breakdown, right, of the sectors, 11 sectors, right, that break down the S&P. So we know, like, okay, this is correct. And so no surprises. When do I want to get in to buy? Right? When do I want to get in to buy? Right? So you can use your ability and your technical knowledge combined with your fundamental knowledge, right, to take advantage of these. Okay. Right. So we can see how we're corrected. Okay? And you can see, right? So if we're looking at these ETFs, right? These spider ETFs, right? So we look at the energy sector, right? We look at the daily, okay? We go through 1 second, everybody. Let me switch out my mouse. Okay. So we go through and we take a look at, right, the financial sector. Okay. See how that's moving up? And then we can go and we can look at that and look at the breakdown. Right. So we can see that 0.89% it moved up. Okay. Estimated weight of the S&P 13.3%. And look at the holdings. We're familiar with these companies, right? That's Buffett, Berkshire Hathaway, JP Morgan Chase, Visa, MasterCard, Bank of America, right? So Joy, when we were talking about, different market conditions, different times, you see different sectors are doing better than some other ones, right? Goldman Sachs, right? And so you can see, right, what's driving is now, if this ETF is doing good, you can break it down. You see these are all, right, there's a positive change, right, for the most part in a lot of these, right? Goldman Sachs up, 6.7, a change of 6.7% to the positive side. You can look at these and you can say, I could go to an individual stock chart, technically, and look at these and trade them if I wanted to. Okay. So you can see that that's moving in a positive direction, right? We look at XLV, look at that, right? Continuing to move in a positive direction, right? So if we go back out and we take a look at, right, healthcare, right, doing well, right? So we think of companies, right? Johnson & Johnson, Eli Lilly, right? So if we look at the holdings here, right, you see Eli Lilly's at the top, right? United Health Group. You can start to do your research. Merck. Okay? So you can start to study these portfolios and think, oh, my own personal portfolio, how do I want it to look? Right. And so what the cool thing now, if you go back and you think about Darwin and how they set you up, they set you up as an index, right? And you can see, right, you have your own ticker symbol, right? So what are you holding? Right? If investors are coming to invest in you, right? That's why I like the entire idea of Darwin. Like people oh, it's just 15%, right? Greed, right? It's just 15%. But when you look at the long-term picture, right? And how they set you up and to where you could train to have your own fund, right? And have people invest in your fund right down the road, start your own hedge fund. Think about that now. See the big picture, right? And what they're trying to do. Now they're just not looking at it from a average day trader perspective, in and out of the market day trading, right? Think about how would I build my portfolio with them as well, right? Take that approach. Think about that, right? And see how things change, right? That's why when we had the interview with the representative from Darwin X, he was talking about, well, the industry average, right, and what they charge, hedge funds and things like that charge 15%, 15, 20%. Some of them are astronomical, right? But on average, 15%. So think about that, right? So moving beyond, the average YouTube influencer and moving and becoming a pro at this, all right, on a major level. So just some things to think about that I wanted to cover on a Friday to end the month, right? And in August, right? We're through the dog days now where the market is slow and grinding, right? And there's not a ton of movement, right? With a lot of currencies, we get it in some areas, of course, right? Following the Fibonacci sequence, um, but just thinking big picture as we move forward into the fall and just a different way of looking at things. Right? That makes sense to everybody? Yes, no?
Yes.
Okay. Right. So keeping your head in the game and realizing how big the opportunities are in this space and that you belong in this space if this is where you want to be. Right? And don't let anybody tell you anything different. Right? You can do it. All right. So that's that. Want to
Yeah,
move over. Go ahead. I'm sorry.
thanks for the advice you're giving us.
You're welcome. You're welcome. Anytime.
Yeah.
All right. We always appreciate all of you being here with us, willing to learn, willing to educate us as well. We learn just as much from all of you, and the things that you post, the questions that you ask, the comments that you make, right? That's what it's all about. So we appreciate you. Want to take a look at before the market open, right? Take a look at the S&P and where we are, right? Bounced around um uh quite a bit, and then we started to creep up again, right? So we're still in that range, right, on the S&P, right? And this is what I was talking about, how it bounced around a bit yesterday, right? Kind of whipsawed a bit, right? You can see how we got those wicks on both sides, right? But right, we're coming into the day, right, in the S&P, right, to the upside, right? So ranging, right? We've got a high there, um, of resistance, right, which is where we topped out yesterday for the high. So make sure we're tracking that to see if we can eventually push through that on the S&P. Right? So nothing scary, nothing that we can't wrap our heads around and gain and understand. Right? And I do believe that the markets are the final frontier for a lot of people. Right? We go to work, we work hard, we have a lot of creativity, we start our own businesses, but oftentimes we lack the ability uh, to have our money go to work for us because we don't understand it. We don't have the ability to scale our small businesses because we don't understand how to build a portfolio for our business to where we can invest the capital that our business is bringing in and have it grow, so then we can open up another business or expand our business, right? A lot of times we just is everyday folks, we just lack the knowledge and the ability to do that, and that's one of the goals in this group, is to help people understand it. And nothing is outside or beyond your reach, right? My dad always taught me, if you can read, you can learn, right? And sometimes we just don't know what we don't know, and we don't know what to read, or what we should be reading or learning and understanding. But I think a lot of that is changing. It's starting to change. And so the more and more we can learn about these markets and get involved, I think the better off we're going to be. the better off with it. So this is where we are on the S&P. Let me go down. Let's go to the 1 hour. Take a look and see what we have going on. So we can see how just right here off of this leg, right in this range. Okay, so this smaller leg, we're starting to recover from that correction. But look at that. Right? That's fascinating. So we'll see. Is ranging. We're back above again, back above that daily level. So let me zoom out and roll back a bit on this to come off the low. See where we are. Just dip off the 1 hour. So we're continuing to just hang up in this zone. Right. And that's nothing new to us to see price stall out a bit. So a lot of bouncing back and forth. We'll see. Let's see what happens with the CPE numbers today. Right. They come out at I said CPE, PCE, I'm sorry. Mixed my words up this morning. But your core PCE, right? We know that that's the Fed's preferred gauge for inflation. So let's see what that number looks like, and if the market will rally, you know, if it beats the forecast 0.2%. Let's see if it can creep down and give us. Let's see if we get a decent boost, right, this morning. So, yeah, that's where we are, just bouncing back and forth in between these two levels. Hopefully that doesn't come through hot. Right. Hopefully it doesn't come through hot, and we continue to look towards rate cuts, and that the market will continue to rally. So we'll see what happens at just beyond an hour from now. So that's where we are on the S&P 500. Any questions on that?
Mm-hmm.
No.
No.
All right. US 30. Okay. Get that. Okay. And so, right. So now we're looking at the US 30 that bottomed out. Look what that did there. That's amazing. All right, take that. All right, so that bottomed out here on the daily. Then we just continue to the upside. So that's our current levels. Right off that 61. Bang. Moving higher, right? And so then you have different ETFs, right? So think about this. So we're looking at the US 30, the Dow. Then you can have different ETFs and different products, right? That track and follow closely, right? The US 30, but maybe the distribution and the weight is different, right? In one particular product versus the next, right? But just like we have a bunch of products that track the S&P closely, but it may be weighted different, right? So you have some S&P products that some products that'll track the S&P, right? So we know that's, I think it's 504 or 508 companies that it tracks, because you have like different classes like Google and things like that, but a little bit over 500. But you may have a ETF that tracks that, but then maybe it combines it with some smaller cap companies, and things like that. So, but we can see here that the US 30, right, is moving to the upside. And so if we looked at and we went and looked at a breakdown of the US 30, you can see which companies within that are driving the performance, right, of the Dow right now. So that's moving to the upside on the daily. So we look for corrections and continuations on that. That's a pretty good move, especially out the Fib. Look at that 61.8. Look at the bullish candle that came off of that, and we've been moving long ever since, right? So that just looks good. That's a good play, good one to study. Look at the low on the stochastic, right? We pretty much double bottomed on our stochastic. Look at that, how that put that in. And then we got that bullish candle coming off the low, and then we got long. All right, so that's where we are on the US 30. If we dip down and we go lower to see where that opportunity may be, we go down to the 1. Run our fib to the upside is low. Okay. So you can see that's a beautiful, right? So if we recover, right, from that correction, right, we saw that on the S&P too. If we continue to make that U-turn, right, get to that D extension. Look at that. That's a beautiful on the S&P. Any questions?
Nope.
No. All right. Cool. There we go. All right. So that's where we are on the US 30. Look at the Russell, right? So we talked about this one a while ago. When we mapped this one out. Look at it climbing, right? So we got a 786 pullback on the daily, and we're still climbing, still moving. So we could take this one. Which one is it? It is there is an ETF that actually tracks it. So we can see, right? So the Russell 2000, these are smaller cap stocks. And there is, what is it? It is, which one is it? Which one is it? It was IWM. It is an iShares. Maybe I don't have it on here. Maybe it's in my third workspace. Yes, right here. So there is an iShares ETF, iShares Russell 2000 ETF, right? That tracks closely, right? The Russell 2000. And so you can see that this is the daily chart for that. Looks similar, right? So if we go over a second and we go to see if I can bring it up. Yeah. So if we bring this over, tab, there. So we can go and we can take a look at it. And look at second. Here, market watch. We can go to BlackRock, right? This is one of their products. We look at the return, distribution, right? The fun facts and portfolio characteristics. You can study it all. So you can look at the total return on it, right? 9.91%, 3-year, right? Negative, right? And then we move ahead to 5-year and the 10-year, right? So you can see this is the iShares Russell 2000 ETF, okay? And you could track it and you could trade it, right? Especially in your Darwin, right? Here are the holdings, okay? And the companies, right, that it holds, okay? Some of them, okay? It's true. You could do your research on your companies, right? Look, Abercrombie and Fitch, right? Companies that is holding, right? So different distributions, different weights, different companies, right? We've got healthcare, we've got real estate, financials, information technology, right? And so you can come here, it's all right at our fingertips and tradable, right? Or you can invest in it and hold it, right? Say, hey, I'm gonna add this one, IWM, it tracks the Russell. I'm thinking, you know, I want to allocate some funds to this because I'm looking at small caps and I think they're gonna make a move to the upside, just like we mapped out technically, right? On the Russell 2000. And so, you know what? I wanna allocate some funds and invest in this and hold it, right? Hey, I think I'm in a interest rate cutting environment. That can help in regards to real estate, you know, the auto sector and loans and interest rates starting to come down. We think that's going to be positive for the economy, right? Sometimes when we look at cuts, is it out of desperation because we're in an economic crunch and we think that we're seeing contraction, right? And so that's why that GDP number, those GDP numbers for the United States was positive. And as we read the fundamentals this morning, right, if we put it all together inside our mind, they saw it as a relief, right? It calmed, what did they say, recession fears, right? And so when they were looking at that GDP report, because it's just like, man, like, are we cutting rates because inflation, right? Inflation is coming down, or as part of this is because we're concerned about, growth stagnating in the economy, and we're thinking about contraction and a possible recession. Got to cut rates to get, to boost spending, right? We've been there before, right? We've been there. And so what is holding the most weight, right? The fear of contraction and a recession, or hey, inflation is coming down. It's time to cut these rates and this market is going to continue to rally, right? So things to think about, right? As we have our investor caps on, okay? Just putting it all together, right? And I know sometimes when people get into the game, it's like, fundamentals are boring. I just want to look at these technical charts. But as we look to elevate our game, right, and be pros at this, the fundamentals, right, the landscape in which we trade and the environment in which we trade and invest does matter. Right? So here we are on a 4-hour chart. So if we were looking at this technically, nothing changes, right? So if we're bullish on this and we've got a 786 pullback, bounce off weekly support, then we say, hey, our price target is pretty much this previous high. That's why you see that solid black line. Can we get to this level with IWM, right? That's on a 4-hour. Okay, you see how we pull it all together? So we're at a key level now, daily resistance that we need to break through. But ever since we've mapped this out off the correction, it has been long. All right. Right. New worlds, right? We continue to discover, right? And learn and get better at what we do. Any questions before we wrap things up this point? No.
Good morning, Benny.
Good morning. How are you?
I'm good, and you?
Doing great. Doing great.
Quick question. I just wanted to know the difference between the Roth IRA and the TFC or EFT.
Right, just different products, right? So you would have to go to the site, right? Depending, because even within your Roth IRAs, there's some differences and things like that, right? So just different investment instruments, different rules and things, right? So a Roth IRA, since you have it, yes. Did I wish Ryan and I were just talking about this, right? So, man, it's if my parents would have known and if I would have been taught when I was young, right, fresh out of college, hey, if you invest the max in your Roth IRA, your first 6 years out of college and your new job, I think the max is what, 5,000. Might have changed a little bit now. I think they changed it on the higher end as far as age, but hey, if you invest in that, not only is it tax free when you come to pull it, but if you invest in that for the first 6 years, so 30K, even if you didn't invest another dime in that Roth for the rest of your life, in 30 years, the projection on that is 1.1 million, right? So different, just like you have your 401k, your IRA, just different investment vehicles, right? Different investment vehicles. So you can invest, like you say, in an ETF. It's just another different asset, different investment vehicles with different breakdowns in what they invest in, to grow your money. So if you just look at it as vehicles to allocate my funds to grow my money over time, so it's hard to say because it depends on your ETF. It depends on, who you're in your Roth IRA through, and they have different, like your IRAs have different tax rules and structures and things like that, and the maximum in which you can invest. And like I say, I think it's is it 5,000? It's from a certain age, from when you're younger to a certain age, and I think as you get older, they give you the ability to invest more. I think maybe it's max $7,000. Don't quote me on none of this, you guys. But that's how I look at it. Is the difference would be in what the allocation breakdown is, what that Roth is investing in, the time horizons and things like that. So could be several differences, right, depending on who you're going through. It's a great question.
Thank you.
You're welcome. You're welcome. Ryan, anything before we close out, sir?
No, sir. My bad.
Oh, you good? You good? That's all right.
Couldn't get to the mute button.
No, it's all good.
Hey, great session, bro.
Hey,
Continue diving in.
I appreciate it. I appreciate it, and always appreciate you being here with me, my man. And so, hey, but the bottom line is too, right? Currency is called currency for a reason, everybody. If we have money, it's best to keep it moving. Right? We got to get our money into something. Yep, we gotta get it on the move, right? Gotta get it on the move. Tyrone said, great week. I appreciate the feedback. And so everybody, listen, enjoy your day. It is a holiday weekend here in the States, but I will be here. Ryan, are you out of town this weekend, or are you gonna be here?
Nope, I'll be here.
You'll be here? Yep. So we'll be here tomorrow morning, 7 a.m. Eastern Standard Time for the weekly ritual. Everybody enjoy the rest of your day. Bye for now.
Thank you. Bye.
You're welcome.